Hey, may pips be upon you. I hope you had a good weekend, traders. Now I'm taking a look at Aussie dollar, Canadian dollar, Aussie CAD, right? I'm looking at the weekly, noticing that it's been on a downtrend since 2011, right? Don't look at it as a channel. That this is my way of looking at stuff, trying to check if market makers are faking us out and stuff like right here or whatever. So pay no attention to that. I'm just looking at where price has been and where it's going, how it's trending. All right. You see, we got all this impulse to the upside, this correction and another impulse. And here we are testing the previous highs, right? The previous higher high. We broke that higher high. So we know we're in an uptrend. All right. But now we come back to test it. Let's go to the daily and we can see it in a little more detail. All right. What am I looking at? I'm looking for liquidity. Where is the liquidity pools? Okay. All right. We know that price left liquidity up here. See how this wick is higher than these previous closes and the previous reach of this wick? That's because market makers will go just a little higher, sweep the stop losses for people that are taking shorts, and then go. All right. They do the same thing when the opposite direction. So I'm looking for their motivation. Where are they taking price? Here we are. This looks pretty strong here. All right. And we're at this level 096660, right? Around here. And we've broken this low. All right. Price came from this high, made a lower low, made a lower high, a lower low, a lower high. You would expect a lower low to be made. All right. It's reasonable to expect that. But price tends to do what it wants to do. And we just gotta look at the footprints. That's all we can do is we look at the footprints of price to try to stay with smart money, right? Now, is price going to turn from here? Is this support here enough to turn price back up? Should we be looking for this scenario? And maybe it dances in here for a minute. All right. If this is the case, then you look for bullish formations and patterns. I'm talking about bullish engulfings, pin bars, but you look for the confirmations on the lower time frame so you can have a better entry. I'm talking about on the 1 hour and 30 minutes. And if you have to, the 15 minute. The 15 minutes is borderline for me. I will look at the 15 for an entry. All right. But I look at other factors. I look at confluences and everything. The 30 hour and up, those are give your strongest confirmations for entries and exits and all that kind of thing. Okay. You get your bias and you get your behavior from the higher time frames. Okay. That's the best way to look at this. Now, if we get a break and a close below 09662, then you know we're going to the next level. I'm inclined to think that's exactly where we're going. Why? Well, a couple of reasons. One, we broke this low. Two, high, lower low, lower high, lower low, lower high, that kind of thing. All right. Couple. There's another thing too. We got a nice and strong demand zone waiting. All right. Got a nice and strong demand zone waiting that could mitigate price. We also have this area has to be this area, and this is a little different. this little area here, that's where price needs to, what's the best way to say this? But liquidators, liquidation managers will come to areas like here, right here, so that they can catch the orders that they made earlier and get out of trades that were they were in that went break even, that went bad, that went against them, so they can get out at break even. Okay. But just for now, let's just talk about this here. We got this demand zone here, and price loves to come to a demand zone. That's why I'm inclined to think it's going to come down here to this whole number 09600. All right. Once we get a break and a close below this level, there's a high probability chance that price will come down to this level. All right. What you want to be careful of is the fake out, where it does this number. It comes down just enough to sweep stop losses, and then come up and play the range. All right. But you have to have a plan in case it does. If it comes back up here and does this number, it's going to probably go back up to the top. All right. And you want to play the ranges. This is a lot. There's a lot of pips to get in between here and then back down. All right. Just bear that in mind, so that if you don't get caught by surprise when price starts giving you bullish formations and patterns, you can find you a good entrance upon a good confirmation, and you can take a long. But I am looking for the short here. All right. Now, with this short, if you go down to the 4 hour, if you're going to take this short, see what we got here? This is looking good. That's a W. And I tell you before, in a W, what you want to see is price go away and come back and test that neckline, and then continue in its path, or then continue up. All right. But sometimes price will keep coming through, but you just want to make sure that you look for a test of the neckline of all these W's. When you see W's, you look for a test of the neckline. You see how it does it? Does it here? W, boom. Comes right back, test the neckline, and continues up. Look at it. Look at it again. Where did price come back? It tested that neckline. You see it right in front of you. This one was not tested. It might be coming for that test right now. Do you understand? And I believe it'll probably come back and touch that. Look for it, folks, and let me know how it works out. Talk to you later.